Welcome to Bears in Exile. Today is May 23rd, and tonight is the nightly overview consisting of the Dow, SPX, VIX, TNA, UUP, and FXE. And probably will be divided into two videos because we have a lot to go over, but we're going to start off with the SPX instead of the Dow for a change. And we were theorizing that we were in this channel. Channel is still holding. We did get what looks to be a directional move today. Very, very, very nice. And once you know it, the very bottom of it smacked that channel and popped back up. So this channel certainly looks completely valid. And we do have complete separation of the short-term moving averages, finally. And they're entering the bar. The bar is beginning to take damage, and so long as we stay down here, the chart will take massive damage and disintegrate in short order. So this looks very, very bearish, with the exception of it hitting the bottom channel, and also it is below the lower Bollinger Band. So a sideways move, small upward move, would be entirely appropriate at this point. So if tomorrow we do have some upwards action, it is not a cause for concern. The euro is not going to heal itself overnight, and fear is something that doesn't just evaporate overnight either. So very, very nice. On the secondaries, we do have further room to move to the downside, not at an excessive amount or anything, but certainly we do have a little bit of breathing room, and if there is a slight uptick, that will give us even more breathing room. So very, very nice chart for the bears. Couple things to be cognizant of, but overall, extremely nice. Now, to give further color to this, we had talked about in the previous videos about the head and shoulders pattern on the 60-minute. Left shoulder, head, right shoulder. And depending on where you placed the neckline, it adjusted the target. I was using a very conservative neckline right over here, which gives you a target of 1305. For it to hit 1305, we are going to have to break out of the channel to the downside, and that is entirely possible. You know, there are other things to be watching out for here. I mean, we could have an inverse head and shoulders here with you know, left shoulder, head, and then a right shoulder at some point over here, in which case it goes up. Or this, you know, head could not be done, and it goes down, finishes itself, goes back up, bounces up a little bit, and then takes off again. So we are not at the end of the world, and you know, my plan theory of all of this was that the previous reverse head and shoulders, which was here, which were way below, would fulfill itself in time after it killed all of the bulls that were banking on it. To do so, it would have to break that expectation, get all of the bulls destroyed, get all of the bears on board, and then flip it on them to mess them all up, and then continue on its merry way. It's kind of a out there theory, but it is a way of making sure the most amount of people lose the most amount of money. So I am looking for that on the 60-minute. On the secondaries, you can see that it is trying to tick up on a couple of the secondaries, and it's still pointing totally down on the other two. But we also have you know, excessive expansion here that is very bubbly, and to fix that, we do have an uptick here. That would be around, you know, 1326, 1327. So something to be looking forward to, and you know, that will fix this, and then it can do whatever it wants to do. But we shall see. The Dow is, of course, massively similar. We do have more room in the channel for the Dow to go down. Same exact thing with the separation of the short-term moving averages, about to put the hurt on the bar and damage it real nice. Room to go on all of the secondaries. 60-minute, of course, head and shoulders, and then possibly another pattern developing here. In any case, the target is the same. It is slightly below the bottom bar of the channel. So, very, very interesting, but it finally looks like we might be breaking some of the chop. Certainly it put the scare in a lot of people today, so that is always, always welcome. Now the VIX popped out of its upper Bollinger Band and snapped right back through it. And we do have separation of the short-term moving averages going through a very weak, sickly looking bar. Secondaries have tons of room to move. So this is fantastic for the bear perspective. And certainly if we are able to collapse the bar and flip it, that will be a very welcome development. We did have excessive separation today on the short-term moving averages in 60-minute time frame, and that has already corrected itself too. We have a downtick here, bring it down to the second, and it was hit. This bubble is fully repaired. So if we get further expansion on the long-term moving averages, that is a textbook guppy entry. And that is looking extremely nice. We had talked about having a target of $19 in previous videos. Yeah, that was hit today. I think it would be more applicable that it goes up naturally and hits it, but that is my feeling. And TNA. TNA really, whoo. We talked about this in previous videos also, whereas TNA is stronger than the S&P. It has also fallen much more drastically. You can see that the long-term moving averages on the daily are almost fully collapsed. Short-term moving averages are still pointing down, getting further separation, and we have this reverse hammer, which also lends suggestion to there being a modest reversal tomorrow. It is not below the Bollinger Band, it is sitting on it, but still it is entirely possible and likely that we will have a sideways to upward tick tomorrow. Secondaries do have plenty of room to move on the downside. They are not maxed out by any stretch of the imagination, and once again, this looks very, very bearish, and a side to uptick tomorrow will not diminish the short-term moving averages by any means. They will continue going down through the bar, crushing it, flipping it, compressing it, and that is what it is. Finally, the charts are telling us something definitive. UUP. Good move up in the dollar today. We had said in previous videos not to count the dollar out, even though it had some rough times, had this wobbly, bubbly, ugly looking advance. It did get outside the Bollinger Band, snapped back, completely to be expected. Notice the short-term moving averages, just like the Dow, just like the S&P, are about to put massive hurt on the bar. So that is fantastic for the dollar bulls. The secondaries are all very high, but being that it was such a huge gap, such a huge jump, that is not surprising at all. And of course, a down to sideways tick tomorrow would not be a bad thing at all. Of course, it could go up. The euro is in dire straits, so currencies are the hardest thing, because they're all news driven. FXE here, the euro, it has popped right on out, and the bar is collapsing. Unlike the dollar, we can see that we already had a pretty good tick back, and we have all kinds of room to move in the MACD histogram. Yes, that does, is the difference between the target and the MACD itself. Um, so this actually isn't going to get, all the way to the top, for a big old crest. Everything else is lower. But this is massively bearish, and especially once the long-term moving averages are destroyed, um, that's just absolutely fantastic. I'm also going to look at gold. Gold had a nice move today. It is bouncing off the long-term moving averages, which is to be expected. People running to gold because they're afraid. We do not have complete separation in the short-term moving averages. We do not have a textbook guppy entry yet. Everything else is ticking back up, but we do not have an entry signal. Certainly you could just think that the news is going to be enough, and that it's going to go up. That might be a good call. It isn't what the chart is saying as of yet. So, and SLV for silver had, of course, the big nasty move. The short-term moving averages are still pointing down. It is slight, but they are still pointing down. The long-term moving averages, of course, are crossing over into a flat line. Everything else is ticking up, though. This one is a difficult call, too. If we had a nice move up, that would give us an uptick. It wouldn't do us very much good because the moving average that sets our target is so close that an uptick will probably hit that target. So the silver chart is not telling us much of anything, even less than gold, which does have a positive bias, just not a strong positive bias as of yet. And there you have it. There is the market overview for this evening, and thank you for watching. As always, this video and chart are for entertainment, educational, and consumption of time purposes only. All investing decisions are your own. Please join us at Bears in Exile, and check us out.